Hello, and welcome to Spark. My name is Natalia Manifold, and I'm a senior manager within the sustainable finance team here at the London Stock Exchange. Today, we are here to talk about how companies can unlock the value of sustainability reporting and effectively communicate their sustainability strategy with investors. This session is being recorded, and anyone who wants to revisit the content or share with any colleagues can do so by revisiting Spark, where this webinar will live as a video on demand going forward. Now, this is designed to be an interactive session, so we do encourage you to ask questions using the functionality built into the platform. You will see the Ask a Question option in the top right-hand corner of your screen, and this question will come to me directly, and I will then present them to the panel during the Q&A section at the end. Now, I'm delighted to be joined by our panel of marketplace members, who I will hand over to introduce themselves. So Rachel, maybe we start with you.
Thank you so much, Natalia. I'm delighted to be here today. I'm Rachel Madden, Director for Sustainability and Impact at Luminous. We are a strategic communications agency that helps businesses ready for change. And we help companies communicate their story, whether that's the sustainability story, the equity story, or the brand story across a variety of channels for a range of important stakeholders. And we see sustainability reporting as one tool in the corporate sustainability communications toolkit.
Brilliant. Thanks, Rachel. And maybe now moving on to Jasper.
Yeah, thank you, Natalia. Nice to be on the call. So my name is Jasper Crone. I'm a director at CEN Group. We're a London-based sustainability consultancy. We help corporates with their sustainability potential and performance and disclosure. And operate actually across both corporates and asset owners and asset managers.
Brilliant, thank you. And Ange?
Hi there, good to be here, thank you. My name is Ange Shada. I'm the founder and CEO of ESG 360. We are an enterprise platform with advisory services, working with large global companies. And we help these companies understand the impact of ESG on their business and valuation. And we're working with these companies across their value chain, across their supply chains, and really sort of trying to understand how ESG can add value to the business rather than simply being compliance. Thank you.
Brilliant, thanks, Ange. And Mary?
Good afternoon, everyone. Delighted to be here. So I'm Mary, the Strategic Partnership and Alliances Manager with ARKK. ARKK was founded 15 years ago, and that was in response to an IXBRL mandate for HMRC, so for tax reporting in the UK. And since then, we've gone on to offer a suite of regulatory reporting requirements and have built out a finance and tax automation platform. 3 to 4 years ago, I moved across to more of a commercial role in the team, and I work very closely with our partners, Luminous being one of them, on assisting them and their clients meet the new mandates that are coming in the most efficient way. So we're currently at the starting point of our journey in helping our client base with the upcoming ESG digital reporting requirements.
Brilliant, thank you, everyone. So it sounds like we've got a very good group here, and a very warm welcome to you all, and many thanks for joining us for the panel today. So maybe we start with our first question. So Jasper, maybe we start with you. The first question is one which we do hear a lot about in the market, and I think it really strips back the discussion to first principles and really one's understanding of sustainability reporting and the purpose behind it. So in what way do you believe that sustainability reporting brings value to a company for other reasons other than just reporting and compliance?
Yeah. Thanks. I mean, I think we certainly recognise that there's a bit of kind of negative feedback in the market around the requirements that companies face, which can feel onerous. In part it's because sustainability reporting has evolved over time and actually continues to do so. So, a lot of sustainability practitioners are breaking new ground all the time. And that's certainly still the case, but also, sustainability across a business is pretty widespread. So there's a requirement really to draw in from all aspects of the business, from from operations, from HR, from sales, from procurement, finance, legal, etc. So you really are. It's really at times quite a flat out job, but in terms of what it brings to companies at the very, very basic level, really just transparency and awareness around where the company is and what its kind of issues are, simply by measuring and disclosing. We've seen companies develop quite strong oversight and control over their sustainability areas, which weren't necessarily managed in the past, or if they were managed in a piecemeal basis. And certainly not sort of comprehensively, with plans, targets, and sort of oversight by a central committee or sort of central strategy. So we've certainly seen, from an internal basis, quite strong development across environmental and social areas within companies. Beyond that transparency and awareness, obviously there's more of a push within the new regulations around integration into strategy. I think we'll touch on that a little bit more in a bit. I think one of the other areas that I think is commonly brought up is risk management. Ultimately, sustainability or ESG is ultimately the control of risks, or the exploitation of the sort of corresponding opportunities within the non-financial context. So actually, we're seeing this is really just an extension of directors' duties and obligations towards kind of safeguarding their companies. We've seen a number of examples of companies who've benefited from this. One more recent one, we conducted a climate related risk assessment under TCFD for an organization, and highlighted a certain number of their sites that were at risk from flooding. And actually then one of those sites did flood, but there was the company had the opportunity to put in some control and mitigating activity against that, based on the report beforehand. So there's definitely a sort of a risk management opportunity, as well as the commercial aspect of kind of winning business, from identifying how the company can benefit from sustainability. Well, I suppose holistically, what sustainability regulation is trying to achieve also is a rapid development in the maturity of the management of non-financial information. Companies have been run from a P&L basis for many years, even millennia. And really the ask is that sort of maturity and control and oversight is applied against the non-financial sides of the business in only actually quite a short space of time. And we're seeing that certainly come through. So what we've seen over the last few years again is the understanding of where the exposures lie within companies, the understanding of the data they have, and then the application of kind of management practices, which are suggested or at least accelerated by by the standards that companies need to adhere to.
Yeah, I completely agree. And I think that one of the things that we often forget within this market is the fact that, this has been a really speedy change within the sustainability reporting, regulatory reporting market that we're seeing. And often when you get the compliance argument from clients, I think what it highlights, and something that we'll touch on later, is the fact that maybe they haven't done their double materiality assessment just yet, because what they're looking at are the risks and the compliance factors rather than just the opportunities that they should be focusing on, that could be highlighted through an assessment such as the one we've mentioned. But I guess for me, with what you've said, it's important to understand, how does sustainability reporting regulations and standards such as ISSB and CSRD differ from traditional reporting standards, not just in terms of metrics, but all of the other factors involved as well?
Yeah, so within both the EU and then ISSB within UK, and actually sort of more globally, are the sort of new incoming standards, and they do shift the emphasis on sustainability reporting. They're risk-based systems and definitely materiality-based systems. So maybe to kind of explain that, from a materiality-based approach, which is common to sustainability. That's certainly a much harder sort of and a much more sort of defined requirement within both ISSB and CSRD. And really, that's the ask there is for quite a thorough and detailed process around what the sustainability criteria or issues are that have a material impact on the business. So an assessment, an actually quantified assessment to uncover those, which is helpful, obviously, because it directs all the attention when you have limited resources to the things that make the difference. But I think one of the other aspects of the new reporting regimes is that they fold in change management criteria into their reporting requirements. So if you take sort of historical requirements, you were asked to sort of report on, say, water, and you'd say, well, last year we used this much water and we implemented this plan and that plan to reduce our usage, and you could kind of draw a line under that topic after that. Within the context of ISSB and CSRD, the ask is a little bit broader and much more sort of integrated and forward-looking. So, your disclosure would be something along the lines of we've identified water to be important to us through that materiality assessment, and actually put a kind of quantified measure on the potential impacts of water on our business. So we know it's important. Because it's important, this is the person who's responsible. These are the KPIs by which we track water. These are the targets that we're aiming for, and this is our strategy that we're setting out in order to achieve those targets. So again, much more of the sort of forward-looking side of things, and actually encouraging companies to develop strategy where they may not have had them in the past. You can quite easily just report on water or any topic without really having any sort of ambition or control in place. I think just to add on one other aspect with these reporting standards is they're both, well, CSRD is mandatory, and we fully expect ISSB to be mandatory in the UK from FY 2026. And that does add sort of level of kind of a level of kind of process and procedure and robustness, within companies' management of sustainability. But secondly, one of the other aspects that it's going to bring is greater comparability. Under a voluntary system as currently exists, you're sort of free to report on whatever you like, but within this mandated system, all companies with similar exposures will be reporting the same metrics, which should give rise to greater comparability and a greater ability for stakeholders to actually rank winners and losers in terms of their sustainability performance, rather than just the amount of information that they're putting out in terms of disclosure.
I suppose one of the key takeaways from that is ISSB is providing us with clear guidance on what the data and process is needed in order to be able to create and gather in terms of metrics throughout the entire ecosystem of the business, in order to be able to report on those what will be mandatory disclosures. And I think that level of consistency and standardization is something that has been desired by the market for such a real length of time, and we're finally seeing it, which is very exciting. And it would be great to get a better understanding of how would an organization go about gathering and managing that data. One of the questions we often get when speaking to companies, especially, let's say, pure play companies who are first coming to the market, is which metrics do we gather? Where do we begin? That's often the first hurdle. So it'd be great to get your thoughts.
Thank you very much. And I think I'll pick up on kind of Jasper's point before as well. So before we had something called TCFD, which still exists in practice. It's part of the ISSB now. Sorry, there are lots of acronyms, people listening here, but that's the world we live in now. So, and there are more to come, obviously. So TCFD 2015, it had a guidance came out. 2017, June, it got sort of implemented officially via Michael Bloomberg-led, task force, and that's why it's called the task force. And then Mary Shapiro came in and everything else. She's now part of the Sustainable Finance. So from there onwards, if you look at today, we've had lots of reports in annual reports about TCFD around. And what is TCFD? TCFD was not really a framework. It's kind of it's a very robust guidance on how an organization should look at understanding the climate risks and opportunity across its value chain of the business, and then report in some sort of financial reporting. there was no clear guidance on how would you do that, what sort of metric. There were lots of recommendations of the task force. And then the market and the auditors then created their own sort of way of presenting it. So I think if you look at different companies, people have different ways of suggesting what TCFD is and how it should look like. But since the invent of the ISSB, part of the IFRS Foundation, we've actually doing this project right now, and that's an example I can clearly give. We have looked at what exactly ISSB is going to be asking across the IFRS S1 and S2. There's about 400 plus data requirements. And this is not purely just the metrics, it's the process and the data. So it's not simply saying, this is my scope 1, 2, 3 data. It's very much, how did you do it? Who did it? Who's responsible? Do you have the LTIPs? Is it embedded in the company's kind of remuneration structure? So you can see, as Jess was saying before, it goes across the business. And now you have a dashboard effectively you can see you're going to have to work with, just like the IFRS and the IAS, the standards. So what I was going to add, only a few days ago, IASB, the International Accounting Standards Board, have released a document which is 8 illustrative examples of how a company would actually use the existing standards, financial standards, to look at the climate risk. So I'll pick on one. They've got IAS 36, which is impairment of assets. And it's clearly give an example, how would you do that? So if I look at ISSB, you have a dashboard now of list of things you must do, but how do you then report it in your financial reporting? And I think you can see now even ISB working with ISSB, providing a clear dashboard. So as I said, if you've got 400 plus data points, you need to really go across the organization and understand. And technology is a great leveler here. So obviously I'm biased here because I run a technology business. So we obviously involved with this process heavily. And we're working with the FTSE 100 company right now and working with their risk and audit, their finance director, and across the value chain to understand, do they have this? Do you understand the requirements and what are the gaps? And some of these gaps, Natalia, cannot be filled just with a tick box. You literally need to go and engage and create a project within a company, which Jasper was kind of referring to before. So I think, how would you go about it? I think you need to involve the stakeholders across the piece, understand the gaps, and that's the kind of starting point, because this is going to be an annual requirement going forward, just like financial reporting.
And that document you mentioned in terms of the guidance on the application of those metrics, that sounds incredibly helpful. Where would one find those?
That is on the IFRS website. Actually, I can always kindly send the link afterwards. And this is the 8 illustrative examples from the IASB. They're open for consultation until, I believe, 21st of November this year. So they're asking market and the participants to feedback on it. And this is alongside the ISSB. And I think, as Jesper was alluding to, it's very possible that we will have in Q1 next year, ISSB being integrated legally into the requirements of the UK Companies Act 2006. And FC and FRC has already obviously put this weight behind it. And with the new government in place, where Labour said, they're going to have make the top 100 companies of the UK to publish their transition plans, which is one of the requirements of the ISSB. So I think what you're seeing is a very much a formalization of this information driven by needs of various stakeholders, top of being the investors, really wanting to understand what is the company doing about these issues, because there is capitalist risk, for example.
Yeah, I think they're all very good points. And I think obviously with the integration of TPT, ISSB, SASB, all going into what will be this new standard from ISSB, it will create a level of consistency that, I think from the London Stock Exchange's perspective, we've really been endorsing for quite some time. So, and we're working with the government on this and have been. So it's a very exciting proposition, which we hope will come into force sooner rather than later, because it will create consistency, which is very well needed, as we all know from our client conversations. I think this is an incredibly long process. Obviously, you have to understand which metrics to gather, then you have to gather them, then you have to understand who in the business will help you be able to continue gathering over the space of time, to be able to not only measure, but to create impact. Because you cannot obviously create impact on those metrics that you do not measure, which is a really important one. But once an organization understands all of those steps, which in itself is quite a high bar, how can they create value from those actions?
I think you've kind of answered this. So organizations, we're working with these large global companies. There are many initiatives going on under the banner of ESG, especially around the climate change, because climate change has been the forefront of the ESG issue, obviously. So you mentioned, transition planning. You've got scope 1, 2, 3. You have supply engagement. You've got SBTI, the science-based targets. You have decarbonization initiatives. So all these now will come under the banner of ISSB, thankfully. So I think from a value creation perspective, you can say that you can literally have a clear goal and a vision, what you really need to do under this. So if a board of a company is asking the exec team, what are we doing about climate change, you have a clear answer. So that's the first step of the value creation. And the second one is, people are asking, why are you spending all this money on reporting? Well, now we have an answer, and this is being officially, integrated into law. The second thing is, TCFD, as I mentioned, when it came in, it was a very much narrative-based approach. So if you look at most annual reports, you will not find very detailed information, even from the high sort of emitting energy sector, which is needed, by the way, to run this economy. Clear indication of what the real impact of a scenario would be on a financial viability of a company. Are there real impairment of assets? Are there really challenges on certain parts of the business which you might have to let go, for example? Or what are the clear opportunities? I think this exercise now forces companies to look at much closer. And when it becomes a requirement at a legal level, I think you will have the senior management of these companies paying attention now more than, I'm not saying they're not paying attention, but I think it becomes a different level of scrutiny externally, because the auditor is going to be asking a lot of these questions. So I think it provides a better opportunity and transparency to create value and see where the risks and opportunities are. Thank you.
Brilliant. Thanks, Ange. That's very helpful. I think it'd be helpful to pivot maybe to CSRD now, which is obviously something that's impacting the market and having a very positive outlook in terms of us looking on a forward-looking basis for reporting. Rachel, it'd be great to turn to you to find out, what are you seeing in terms of the top 3 factors of what you're noticing from early adopters of CSRD?
Yeah, thanks, Natalia. CSRD is a really interesting reporting regulation that is impacting UK companies. There are some that are dual listed, so on the London Stock Exchange, but then other exchanges who are having to report now. And then also because of the way that CSRD has constructed the scopes for who has to be in compliance, there are many, many UK companies that are operating within the EU that will be in scope sooner rather than later. And just to touch on some things that Jasper and Ange both mentioned, I do think that implementing compliance to CSRD is a kind of change management process that is going to touch many, many more parts of the business than previous ESG or sustainability reporting requirements have done. And that kind of change takes time. And I think there is a lot of fear that I'm hearing from companies around what it's going to take. Ange mentioned 400 data points for ISSB. For CSRD, it's 1,100 plus. So it's quite voluminous. But, it's not all bad news. So as you mentioned, we've actually at Luminous just completed a piece of in-depth research examining 19 early CSRD adopters, and we're actually launching that research tomorrow at Luminous during a webinar. If you're interested, you can go sign up at our website for that. I think one of the interesting things that we're finding in terms of what do those reports look like is the thing we're always asked about, which is how long is my annual report going to get? So if I have to report against all these new data points, what is that going to mean? And we found that it could be an awful lot longer. We reviewed one report that had a sustainability statement of 148 pages. Now, that could simply be a very good, very in-depth assessment. But I think that there are some companies that are frankly expecting their annual report to do too much, to be both compliance and engagement, to tell this objective performance that is really meant to be the information for financial markets alongside this kind of engagement storytelling approach. And I think if you don't want your report to be 1,000 pages long, that could be a really hard ask. So I think companies need to start getting more critical around who is the audience for the annual report. And then who are the other audiences for other kinds of sustainability information that they might want to communicate out through other channels. I think one of the other things that we were talking about was the materiality approach that's taken by CSRD, and in CSRD, it's a double materiality approach. So in the research, one thing that was interesting is that we found a number of companies doing fairly well at double materiality. Over half of our sample had actually carried out a double materiality assessment that had a reasonably good alignment to the requirements for a CSRD aligned double materiality assessment. And the good news for those who may be in scope for both CSRD and ISSB is that double materiality assessment can also be used for ISSB. So if you have a good CSRD aligned materiality assessment, there's no need to do another one. Should be telling you all the right information. The third thing that was really interesting, though, coming out of the research was that although we found, over half doing a pretty good job on double materiality, almost no one was doing a very good job at then carrying the results of that materiality assessment into their sustainability strategy. So I don't think that the decision making is really embedded yet. We saw that most of the early adopters in our research had not even updated their strategy to reflect the results that came out of their materiality assessment. So I think in terms of readiness, still some way to go.
So still in the preliminary stages is what you're telling us. However, there's actually less work involved than one would perceive at the beginning, because actually there's no need to double count the work, especially if you're doing the DMA, the double materiality assessment for CSRD. Actually, there's such a huge amount which will map over to the ISSB assessment as well, which is great. And I think that's what our listeners want and need to hear, the fact that the individuals who are writing these regulatory reporting requirements are listening to the market and understanding the fact that there needs to be some level of overlap, and that overlap needs to be clear in order to make sure that we're all using our time wisely and we're able to answer the questions. I suppose one thing that I picked up on, I guess you were kind of highlighting there the benefits of maybe not including the sustainability section within the annual report, but having it as a sustainability report or as a secondary report. And one of the things that I've noted when having discussions with clients is sometimes when that information isn't included within the annual report, it can be perceived as maybe a secondary non-financial metric sideline, rather than actually something that we're trying to bring into this world of financial reporting, perceived in the same capacity, with the same weighting, auditable in the same capacity. So yes, lots of interesting things to pick up on there, but thank you, Rachel. Mary, maybe we move over to you. I know that we're very aware that the ESG landscape is constantly evolving, and that ESG digital tagging and reporting is also going to be a requirement going forward. Something that I'm still yet to grasp myself. Could you tell us a little bit more about what the requirements are, when they come into force, what regulations they're derived from? Take us back to the I guess the foundations.
Yeah, of course. I'll answer as best I can. Some of those questions are still questions for ourselves. But the digital reporting tagging requirement for your ESG disclosures will be in an iXBRL format. So iXBRL will make what is tagged within the accounts, but machine and human readable. So it is a digital format, machine readable, but it will retain the design and the creative elements and the storytelling that a lot of people want to see in their PDFs. That's what companies are already creating. So when you open the report, it will open in a web browser. It will just look like the PDF, your nice glossy sustainability report, your annual report. But in the background, there'll be tags embedded onto some of the disclosures on the sustainability section, so that when you use machine readable or iXBRL readable software, you can easily, at the click of a button, analyze the tags within your own report, across other reports in the same sector, in the same jurisdiction, etc. Like, it will make these reports so accessible at the click of a button ultimately. iXBRL is not a new concept. In the UK, it was first introduced for H4C back in 2009. So it's been around for tax purposes for 15 years this year. And then Irish Revenue in Ireland introduced a similar concept or a similar mandate back in 2013. More recently, and this will apply to a lot of companies that will be first in scope of CSRD and ISSB, is that listed companies for their group accounts, or main market listed companies for group accounts, had to comply with an iXBRL mandate. And that was introduced back in 2001. That was the ESEF mandate, so the European Single Electronic Format. Initially, that just applied to the financial statements, and since then it's kind of been rolled out to more detailed tagging of the notes, and that is very much an evolving landscape at the moment. And we are anticipating that ESG will somewhat follow suit. There are a number of digital taxonomies that we have. So we have ESRS, which will align with CSRD. We have ISSB, we have SECR, and that incorporates TCFD, and we have GRI. So as Ange said, there are too many acronyms and you will be sick of them by the end of this call. The most developed in many ways in terms of, I guess, legislation is ESRS. So where we are at the moment with ESRS is that we have a draft version of the taxonomy. The final version of the digital taxonomy is expected imminently. That draft version can already be used as guidance for issuers creating their disclosures. It is expected that as I said, the final version will be expected imminently. That then will go to ESMA. ESMA will then likely introduce a public consultation on the application of the taxonomy, off the back of which they will update their reporting manual, and that's likely to be updated next year. This is all expected. We still are waiting on the actual announcement that the mandated digital tagging will not apply to 2024 reports or December 2024 reports. But given the kind of timeline of when we have the final taxonomy and the application of ESMA, we are looking at 2025, I think, at the earliest. That's not to say that people can't start doing something now, but we are looking at a mandate for submissions in 2026.
Okay, great, Mary, thank you. So a couple of asterisks there for one to bear in mind. But in terms of what companies can do now to prepare, to make sure that they're ready for this, is there anything that you would provide in terms of guidance?
Absolutely. I think if you consider the digital element now, it will certainly make your life a lot easier when the mandate comes in. The draft taxonomy released by EFRAG, the ESRS draft taxonomy, that can be a key tool when creating your digital disclosures. The purpose of iXBRL reporting is to make what you are reporting more comparable to others in the same industry or same jurisdiction, etc. So using the digital taxonomy as a tool for creating the labeling for your disclosures will in turn make your disclosures more comparable to your peers. You can also consider, what the taxonomy itself. So the taxonomy itself we're looking at thousands of tags. So it's not just a matching exercise of, there's 10 tags to match across your disclosures. It is quite a detailed taxonomy. So there's a key consideration on the issuer side of how they actually want to prepare for this. And iXBRL, I would imagine for many sustainability companies, is a relatively new concept. When we look at the listed companies who had to comply with the ESEF mandate, many finance teams were already familiar with iXBRL, having had done it for HMRC and Irish Revenue. But for sustainability teams, this is brand new. So getting ahead of the curve will certainly mean that when the mandate comes in, as I said, likely 2026 submissions, you'll have a much easier time. And we saw that with ESEF for our client base, and we work with nearly 70% of the FTSE and many issuers right across the EU. Those that did it voluntarily for their 2020 annual accounts had a much easier time when it came into play. Part of that too was also the timeline. As we know, audit sign-off can go down literally to the wire. So having a really tight timeline of getting your final report ready for sign-off and factoring in the tagging, because the tagging isn't just a matter of a click of a button. There is time to be considered to apply the agreed tags and get that turned around is key. And not everyone actually considers that. So having that built into your timeline this year will make life a lot easier next year. It's also worth considering how you want to manage it yourself. As I said, it's not just a matching exercise in terms of the tagging of the report. So do you have the resources in-house? Do you have the resources and software capability to apply the tags? Do you have the knowledge in-house of the digital taxonomy? Yes, you might be familiar with the sustainability mandate requirements, but are you familiar with the digital element of that and the application required by ESMA? Or do you want to look for a service provider who has these skill set and you want to outsource that, and how does that impact your timeline? So I think there's a lot to be considered. It's not just a matter of sending your report next year to a service provider, doing it in-house at a click of a button. It is quite detailed, and a lot of review has to go into it. And I think auditors will also play a key role. So keeping in mind your timeline, and if you can bring some of that into your timeline this year, come the mandated year, you should have an easier time.
Great, thank you, Mary. So the key takeaways, do get started on that, and then hopefully it will all go swimmingly. But one of the things you mentioned there, Mary, was taxonomies, and I'm aware that there are over 50 ESG or green taxonomies globally, which were originally created to provide clarity, consistency across the market, creating investment areas which are labelled, classified as green for investment purposes. Jasper, it would be great to hear from you, and if you feel that the current state of affairs of what we're seeing with all of these taxonomies is allowing us to reach that end goal of consistency and clarity.
Yeah, sure. I mean, I wasn't aware that there were 50. I mean, and that certainly isn't an ideal outcome. Taking a step back around, you talked about sort of investment funds and corporates, and I suppose they're, broadly speaking, they have the same ambition, which is to channel capital and kind of consumer choice towards more sustainable choices, or more sustainable businesses. And perhaps actually more to promote the negative and to create much greater differentiated pricing or capital for less sustainable practices potentially. But yeah, I mean, I think that their ambition is right. I think in practical terms, the application, as with many of these kind of things, is a lot harder. It's a lot easier said than done. Within the corporate perspective arena, the one that's live is the EU taxonomy. What we found there is that the classification criteria that they've used to delineate sustainable activities is great in theory, but very difficult to put in practice in the real world. Companies are just rarely uniform, and they rarely do sort of one thing. So, so the taxonomy guidelines are not really that applicable to a number of companies. And not only that, the application, which is a problem for companies, it's not necessarily a problem of the taxonomy itself, but companies may be doing something better than their peers within one kind of dimension, sustainability dimension. They may be using a lower emissions intensity to produce the same product, but at the cost of another sustainability dimension. So having to try and work out where you are against all of those criteria is practically quite difficult. So the short story to your answer is that we're all on the journey. It's incomplete. It doesn't feel like the taxonomies are complete enough from a corporate perspective to work with. And I think that they will be refined through sort of trial and error over time. And in addition, companies won't be able to apply them to sort of 100% of their revenue. They'll just have to be able to kind of align in part to where they can kind of clearly apply the taxonomies from a corporate perspective. Within the investment arena, so the UK has implemented the fund naming kind of directive under SDR, and similarly within Europe, the SFDR, which has been around a bit longer, it's not necessarily naming as much as kind of grading of the sustainability of funds. And they have within Europe that the experience has been that a number of investment companies rush to kind of get the most sort of green label and since dialed back that ambition, partly because the reporting obligations are really onerous, but also partly because it's really difficult to demonstrate that actually the holdings, the information that the holdings within your portfolio can kind of there's a lack of information essentially to provided to you as an investment manager to justify that that naming. Within the UK, this is this SDR criteria is really only released in the last month or so, and my understanding is it's going reasonably slowly. I think people are wary of the experience that they saw within the European context. So I think it's something that everyone will grow into over time. But I think that the construct of it is right. And once we get there, I think, that what it means and what it helps to delineate, but for the consumer or for customers, will be really useful.
Right, thank you. And I guess taking us back to the taxonomy point, in terms of the many taxonomies that we may have, one of the ones that I guess is at the forefront of my mind is the fact that the UK is developing its own UK green taxonomy. And it would be great to find out more in terms of when that comes into force, how similar is it to the EU taxonomy, what will be the implications, how does one hone in on the differences?
Yeah, it's all a little bit up in the air at the moment. As far as the latest kind of guidance on this is that the consultation actually process on the UK green taxonomy will take place in the near future, and after that consultation and the finalization of the initial draft, there'll be at least 2 years of kind of a testing period. So at best, we're looking at an application or at least mandatory disclosure requirement, I would say, in FY 2028 in the UK. That said, for the companies that cross over and have CSRD requirements, they'll be using the EU one already, and I expect that they'll look very similar. Ultimately, we'll just have to wait and see. But really, what are the implications? This is about, as I said, sort of defining how sustainable business activities are. Ultimately, within the EU context, companies need to show their revenue percentage, their OPEX percentage, and their CAPEX percentage, all against the EU criteria, and essentially, really only a few numbers, which you should be able to walk into the bank and say, I'm 62%. Exposed to in my revenues to sustainable activities, and my peers are only 42%. Can I get better pricing? And I think that's what ultimately is what they wanted from this. One of the positive side shoots is that in an area in this current market where greenwashing concerns are rising, it also gives a framework by which companies can describe their products and their practices, and avoid kind of going down in those kind of greenwashing routes. So it does have a sort of secondary benefit within the kind of consumer markets in terms of defining what is sustainable or what is green potentially, and what is not, at least putting some criteria around it. Within the UK, that kind of mantle is already being taken up by the Advertising Standards Authority to some extent. So actually there are already negative implications from kind of going down a greenwashing route, and we've seen a number of cases of companies being called out on what they're saying already. So I think it doesn't really sort of change that dynamic as much as kind of provide better guidelines around and a better framework around how you can talk around your sustainability exposure.
Definitely. And I think the scrutiny that you've mentioned there in terms of the advertising, the anti-greenwashing regulations that we're seeing, and with some of the key players in the market as well, who are being penalised by it. So it's great to see that there's that layer of scrutiny, which I think is helpful, because ultimately the main goal is, if one is to label something, they need to be able to justify that labeling through a process. So it's great that this is coming into force in due course, even if 2028 seems far away now. I'm sure it won't be there before we know it. But it would be great to turn to Ange. And Ange, I know that we've discussed so many reporting frameworks today, and the fact that the likes of TCFD, SASB, TPT, going forward will all merge into this new ISSB standard, which we hope will come into force soon. Do you believe that this level of standardization will hone in the same level of attention from auditors as financial reports?
Yes, it will, because as I said, once IFRS Foundation got into the game, in the ring, it changed the equation completely. So it's not a voluntary thing anymore. Well, in a way, ISSB and the IFRS are not imposing it. It's the governments in various countries will impose. And I think I like statistics. So I'll give you another bit of that, which is nearly 60% of the world's GDP is now said they're going to implement the ISSB as a baseline. So I think that's a very good step forward for companies and the investors and the stakeholders, because this is the discussion we're having. It's a one all-encompassing disclosure agreement kind of coming in. And I think you've probably heard this before. People are still using the non-financial reporting. I'm sorry, but there's no non-financial reporting anymore. These things will have real implication. And I think this is why maybe IASB has come in and said, we would like you to consider the impairment of assets, for example, from this so-called non-financial. So I'm not saying it's going to merge together, but I think it will definitely have the same level of scrutiny, because some of these shifts, like the energy transition, which is kind of happening, not at the speed as we like, because as the world, we are far behind. So this will have implications, and there are very credible reports out there pointing to a disorderly transition. So investors are reading that, obviously, and what they would like to know is what are the implications. So auditors will pay attention to that, because it will be their responsibility to make sure there is no, misleading information. We talk about greenwashing here, ending up in financial reports, which is giving a rosier picture or of a negative picture. So I think auditors will have a big role to play in shaping. One thing I was going to also add is ISSB, when they first launched this, I attended the IFRS Foundation conference in London, and the question was, scenario planning is one of the things you have to do. Which scenario should you using? And one of the comments were made that the people should not be using, their own scenarios and everything. But if you read what ISSB is saying, they're not really being prescriptive about this. They're still leaving certain things to the market to define. So which scenario should you be using as a sector, for example? Should you be using IEA scenarios, or you should be using a BP scenario if you're an energy company, for example? So that's still being defined. And I think auditors will play more and more sort of role as this kind of practical. But I would say the companies need to really gear up for a level of scrutiny, which was probably lacking a little bit in TCFD, because not only was it fault, it was very much a guidance issue. But now, as it becomes formalized, it's a good step forward for all involved.
Right. So we know that we have the auditor's attention, and we know that they'll be looking at what clients are creating. But what can a company do to implement stringent controls to implement these requirements?
You're asking very good questions, Natalia. So I think the first step I think you're going to have to do is, as I said, really understand. And one thing we're doing with the companies, and I think it probably resonates with Mary, is the technology. So what we build is a clear roadmap of all these different acronyms, and there are so many commonalities across these acronyms, by the way. So rather than saying, I'm going to do ISSB and the CSR and everything, you really need to understand the intent of these so-called regulations or frameworks exactly the same. They are saying, tell us what the impact of these issues on the company on a short, medium, long term, and the impact of the company on the outside world when I come to the EU. ISSB is very much about financial materiality, although there are, discussions around dynamic materiality. We should probably don't have time for that right now. But if you understand the data points I was referring to before, you need to look at from a technological perspective, because this is so much data you have to collect across the business. You need to deploy some type of technology to understand, assign accountability across the business. So this is not an ESG department issue. This is a whole business issue. So this is manufacturing, if you're a service business, if you have locations overseas, your suppliers data, your value chain data. And I think once you understood this, then if you treat it exactly like your financial reporting, you have to sort of create specific roles perhaps in the audit function, because this is extra requirements, but also think about the people who are helping with the other auditing requirements. Can they help with complying with some of this stuff? And I think what you will find is there will be some commonalities of the work already being done. So it might seem a lot, but I think if you scratch the surface and build a clear picture across the actions you need to take, rather than simply saying we have to comply with all these acronyms, I think that could really help with setting up a good internal audit process of it.
Brilliant. And I think that's the key thing to take away from today. There's so much overlap in these regulations. This isn't it may seem like a mountain to climb, but actually there's a substantial layer of foundation which is consistent amongst all of them, which is allowing clients or companies to be able to have a good start to the rest of the requirements that they're needing to report on. I guess from a digital reporting lens, Mary, it'd be great to hear from you in terms of, are we aware of any digital reporting requirements that will flow through from ISSB?
In short, the answer is yes. And in some aspects, we're actually further ahead of ISSB as we have a final digital taxonomy for ISSB. I think as Ange said earlier, that is expected that we'll have the UK government sign off on ISSB in early 2025. Once that happens, we're expected then to also get the sign off on the digital reporting requirement. That will be mandated. And in the UK, we have the FSC who create our local taxonomies. So when we have the sign off that a digital mandate will come into play, the FSC will then adopt the ISSB taxonomy into their existing taxonomies. So you've seen this with the likes of ESEF, where the FSC have adopted that into their own version called UKSEF. And essentially what they've done there is add a few UK specific tags. So if you were submitting your ESEF report to Companies House, you'd have like your Companies House registration number on there. So the FSC will adopt the ISSB tags into their existing taxonomies. And generally speaking, we get new taxonomies released by the FSC in Q4 of the year, so usually October time. So I would expect that the earliest release that we'll have for those taxonomies will be in Q4 2025. So in addition to that, then we need guidance in the application of the taxonomy. So we don't have that yet. That will likely follow at some stage next year. And whether or not it will be phased in. Obviously, the data points in ISSB will be a lot less than ESRS, so there may not be the need to phase it in, but it's also a consideration for issuers and for service providers. Currently, issuers can use the existing ISSB digital taxonomy, and again, similar to what I mentioned around the ESRS taxonomy, it can be used as a really useful tool for creating the labels of your disclosures, but you can also tag your reports. They may not be accepted by regulators, but you can certainly make them public so that other stakeholders can utilize them. Also in the UK at the moment, we do have tags available for TCFD and SECR in our existing FSC taxonomies. So what we've seen, I'd say in the last year, we've seen a lot of the issuers we're working with move to what can we do now as a stepping stone for ISSB coming in. So that if you start tagging your SECR and your TCFD disclosures, that is a huge step towards what your ISSB disclosures will be. So it's kind of a nice gradual way into what the digital reporting mandate will be, or expected to be.
Brilliant. Thank you, Mary. And Rachel, I'm aware that more and more regulatory reporting requirements are becoming mandatory, especially depending on where you are in the world. And sustainability reports are optional, but they are a fantastic way for companies to provide a narrative on their sustainability story, their journey. However, we are aware that this is one of just many channels. So in terms of other options available to communicate a company's sustainability journey, what would you advise?
Yeah, I think it's a really interesting question because although a sustainability report may be optional, reporting on sustainability is quickly becoming mandatory, as we've been discussing here. And as you've said, that kind of separated report is just one of many channels. I mean, both CSRD and ISSB require that the sustainability disclosures that are financially related and important for the markets go into the annual report. There will not be a choice there. Because sustainability reporting is one tool in the toolkit, it's really important to bear in mind that that is targeted at a very specific group of people. And I think one of the things that we talk about a lot, particularly when we're talking about investors, is whether something is decision useful in terms of making an investment case or an investment decision. So taking an audience first approach, you can take all of the sustainability disclosures that are relevant to the investors and make sure that they are there in the annual report where they will have the same level of scrutiny and auditability. But there is another group of stakeholders who perhaps aren't going to pick up the annual report. And I think that companies can be thoughtful about who they are communicating sustainability information to. You know, additional channels could be things like the company's social media channels, direct email that they have, maybe with customers, with employees, even with civil society or NGOs, in addition to their investors themselves, the company's own website, as well as deep dive reports or storytelling on specific topics of interest. They could release those in a microsite or even as a series of videos. I think the really important thing to understand is what channels the audience are already using, where they're already hanging out, and then aiming to meet them there with the kind of information that they're looking for.
Great, thank you. And I think one of the things that we often hear is often saying nothing is actually the riskiest choice of all. Have you also found that that's the case?
Yeah, it's a really interesting question. So obviously, there's been a lot of new regulation introduced to prevent greenwashing, which is the overclaiming or making misleading claims about environmental performance. And I think putting laws in place to prevent that is a very good thing. But what's been interesting is that I think that some of the decisions that have come down recently about whether something is greenwash or now have actually overstepped the meaning of that legislation. And so the result of that is that rather than seeing companies strengthen the evidence of their commitments or their claims, which is what we want to see, we're starting to see some companies actually put a pause on their sustainability communication because they're worried about backlash and accusations of greenwash. So they're doing what's called green hushing. Now, green hushing is also a huge risk. Why? Because that is actually the removal of responsibility by companies for these environmental and social risks and negative impacts that they either have or potentially are causing. So the biggest risk I see there is that those companies do nothing. So if that climate of fear around greenwash means that companies are no longer putting resources into sustainability, I think that's an even bigger problem, because we really need to be moving towards a more sustainable economy. And in order to do that, it cannot be governments alone. Businesses have a huge role to play. Not only are there big risks to mitigate, but there are lots of really important opportunities, both financial and social, to take advantage of. And I think all of the actors in the economy need to move in the right direction to make that happen. So I think doing and saying nothing is not an option. Companies will need to take action.
Completely echo your thoughts there. And I think, I mean, the main foundation of what we've been discussing today is consistency, clarity, auditability. The fact that we actually now have metrics which are required upon a variety of jurisdictions is a wonderful thing, because it means that we now have a process to follow. So the ability to be able to vocalize the things that you're doing is a great opportunity, rather than something that you should keep quiet. And hopefully more and more companies will be thinking in the same way. Okay, so we don't have long left. So a final question. I thought it'd be fun to do a quick 30-minute speedy question to understand what each of you are thinking or seeing for the immediate future for sustainability reporting. Rachel, you're the first on my screen, so I'll go to you.
All right. Well, I think it's going to become bifurcated. I think sustainability reporting for investors is going to become more compliance driven. I think that CSRD will have an important halo effect, and the volume of disclosures required is going to make the information itself more concise, more objective. But as I said, I think there are important stakeholders other than investors who are interested in how companies approach sustainability, and many of those stakeholders are not going to pick up an annual report. So I think companies have a real opportunity to introduce more narrative storytelling and be bolder with their sustainability communication. I think companies could really think about communication like narrative nonfiction. You know, there's a classic classic narrative nonfiction by Michael Lewis called Moneyball. It is a thrilling page turner. It got made into a movie with Brad Pitt. It is essentially a book about statistics and decision making. I think that companies could really start thinking about their communication in that way and get a lot more engagement out of it.
Thank you, Rachel. So be bold is what we're taking away from Rachel here. Thank you. Mary, 30 seconds. What have you got for us?
I think from my side is the key point is to consider the digital element. It's not just that regulatory reporting requirement. Taking ownership of your digital report is just as important as taking ownership of your disclosures in your PDF. We will see more stakeholders using your digital report. So it's not just going to be the regulators that you're submitting your report to. These will be in the public domain. So as I mentioned, that there are software readily available on the market that can analyze these reports at the click of a button. We've seen a lot of our listed clients using the report to analyze using iExplorer reports to analyze their peers' reports. So it's saving time on their side. And we will see investors using the tagged report as well. So my key takeaway would be consider your digital reporting now and ensure that you're taking ownership of your digital message, not just looking at your disclosures in your PDF.
Brilliant. Thank you, Mary. I'm taking speed away from that one. Jasper, coming to you next. 30 seconds.
Sure. I think you know, a lot of companies don't really have any big change for this year in terms of their reporting requirements in the most part. So really just to begin to think about restructuring, even if it's just in layout terms, into that sort of new format of sustainability reporting. So governance, strategy, risk management, metrics and targets, and just to sort of think about what the implications and the gaps that come from that as you begin to think about each of those your material topics against that forward-looking format.
Brilliant. Thank you, Jasper. And Ange?
I think it is a future of sustainability reporting. So I think I will speak from experience in the work we're doing. I'm going to put myself out of business in the next 3 years. So what that means is you very much have, we would not call it ESG. It's very much part of understanding these trends and understanding and embedding them across your business and controls. And I think this is where we're headed. When the ISSB and these things are complete, you will simply see this is just kind of part of your business going forward. And you're considering these new big issues like climate change as business as usual stuff you're currently dealing with. So that's my prediction. Thank you very much.
Brilliant. Thank you, Ange. Well, thank you to everyone who's joined us today. Thank you to Jasper, to Ange, to Mary, to Rachel for this wonderful webinar and for some excellent insights. You can visit each and every one of their profile pages on the LSEG Issuer Services Marketplace website. We're so sorry that we didn't get to Q&A today, but we've had a really interesting discussion, hopefully some fantastic takeaways for everyone. So thanks again and have a lovely rest of your day.
Thank you very much.